Hello everyone, welcome to another session on dollar INR. Okay, this day I am going to cover Brent crude oil price first and then I'll come to dollar INR. Lot of interesting things happening and we need to evaluate how to hedge risk for both dollar exporters as well as for importers. Okay, so this is the Brent crude oil price and remember this is a 4 hourly chart. Okay, it's not a typical daily chart, it is a 4 hourly chart. All of us remember that this is the period, in end of February, early March, when prices shot higher. Okay, and after that have a look at this formation, how it has happened. Okay, prices went higher, came down and found support at this region. Okay, very important, keep looking at the circles that I am making, this region. Prices shot up higher again and came down and found support at this region, the same region again. See, this region and this region is very close to each other. Now, really interesting, after that the price went higher again. Now, there is a good cool off and for the third consecutive time, the Brent crude oil price have found support at this region and that is the 88 to 91 dollar per barrel region for Brent crude oil price. Okay, so very clear that the prices are finding a support at around 88 to 90 dollars for Brent crude oil price, even though there is a lot of talks about peace and ceasefire and opening up of the Strait of Hormuz, but bottom line, the crude is not coming below 88 to 90 dollars a barrel. 3 consecutive occasions the price have found support at this level. Now, what does that mean? That means that this support is critical and if this support breaks, then obviously there could be a big downfall, but only if it breaks. If this does not break, then you might keep seeing the prices going higher as per the geopolitical uncertainty that all of us and the markets are facing. Okay, so keep a very close watch and eye on the Brent crude oil price. If it falls below that 88, 87, 90 support, $3-4 support region. Okay, so this directly coincides with our dollar INR. So let's look at dollar INR and let's try and evaluate how we try and make some sense out of dollar INR. Okay, so we have been following this chart, very clear upward sloping linear regression channel. Okay, but some interesting things happening in the last 2 to 3 weeks. All of you just look at these two moving averages. One is the 25-day moving average. Okay, that is this blue line. Okay, this blue line is the 25-day moving average and the yellow line is the 0.5 percentage filter below the 25-day moving average. Okay, so this yellow line is just the 0.5% below the 25-day moving average. So if 25-day moving average is going higher, obviously that 0.5% filter will go higher. If the 25-day moving average is coming down, that 0.5 percentage filter will come down. So the yellow and the blue line will go in tandem. Okay, so that is the first set of indicator I want you to very closely look at. The second set of indicator is the 50-day moving average, which is this green dotted line. Okay, all of you look at this green line. Remember, the green line is a dotted line. Okay, the green dotted line, just like filter we had in 25-day moving average, there is a 0.5% filter on the 50-day moving average also, and that is this red dotted line. Okay, so green dotted line is the 50-day moving average and the red dotted line is the 0.5% filter below that 50-day moving average. Okay, so let me just get rid of all this. I want to show something else. If you look at the blue and the yellow line closely, in this entire period since when is this? This is September last year. The prices have been coming to the green line, okay, till probably the red line and then going higher again. Okay, again this green and yellow line here, below the blue line here. Okay, so bottom line, what I am trying to tell you is that the prices are coming towards the 25-day and 50-day moving average region. Okay, that range, it has come here again. Okay, and it has come here. So multiple times it is coming towards the 25-day and 50-day moving average, and from there it is going tending to go higher. Now what has happened yesterday and today is that it has come below the 25-day moving average and even below the 0.5% filter below that moving average. Okay, so this was the high that we saw, which was close to almost 97, 96.9697, and now we are below 95. Okay, so it's like almost 2 rupee lower than the peak, and we are getting good signals from the moving average indicators, and that suggests that these are relatively very good levels to buy dollars, that is hedge for dollar importers. Okay, so if you are a dollar importer, look at any level below 95 to restart your hedging plan for your dollar imports. The prices are almost 2 rupees lower from the all-time high, and it is very close to the support indicator that we have been following for a long time. So this looks to be a level to buy. Again, next step, if the prices still go lower and comes to the 50-day moving average region and the 0.5% filter below the 50-day moving average, you should hedge more. Okay, those are all great opportunities to hedge for your dollar liability. Okay, now let me show you the third chart. Third chart is an extension of this chart. Okay, where I have tried to show the Bollinger Bands. Okay, the Bollinger Bands here. Again, the same chart, similar trend line sloping, upward sloping, and we have this Bollinger Band, which is like the red one is the upper band, the green is the lower band, and the blue line is the middle band. Okay, and if you have noticed, if you notice carefully, prices are tending to fall below the middle band, here, here, all below the middle band, then again going higher, below the middle band, going higher, below the middle band, going higher. So in the current scenario, yesterday to today, it is below the middle band of the 22 Bollinger Bands. So that is another signal that this looks to be a decent level to buy dollars. Okay, so a big shout out to all dollar importers. Please hedge your liabilities for the next 1, 2, 3 months using simple forwards. The spot is very comfortable, very low, and you should certainly look to hedge. If you need some diversification and you feel that RBI may intervene, multiple things might happen, there might be cool off in the Middle East again and prices will come down. So do some vanilla options, buy some dollar calls. Okay, forwards will protect you from rupee weakening, calls will protect you on both sides. Okay, even if there is a rupee gain, you can just ignore the call option and buy at the market, but you will be forced to use the forwards. Okay, so to get some flexibility, use dollar calls also for your hedging your import liabilities. That is for dollar importers. Okay, now for dollar exporters, we have seen multiple times, you have looked at the moving average also, you can look at the Bollinger Bands, multiple opportunities you have had to hedge in the recent past. Okay, so you can hold on for a while now and target probably 96 plus levels again, because again the problem is not solved. RBI has a huge outstanding positions wind up, and FIA are still not coming in. So dollar supply is still less, crude prices are high, dollar demand is more. So the pressure on rupee will remain. Okay, so dollar exporters can hold on for a while, look at higher spot levels to restart hedging. But if you are mandated to hedge, look to hedge using dollar puts now. Don't do forwards, or even if you want forwards, you lock in forwards at much smaller percentages, do more for dollar puts. Okay, so that is the insight on dollar INR from my side. All of you have a great evening and a great day ahead.